Bitcoin's price is currently crashing right now, and we don't know where it's going to land, but I think I have a clue. Also, Bitcoin tumbles below 60K, risking deeper pullback as the crypto market endure the worst month since the FTX crash. And we're going to talk about some of the economic factors that may be factoring into why the price is currently going down. And if you find any of this interesting, then you should definitely watch this video. 3, 2, 1. All right, welcome in today, guys. We're going to talk about the Bitcoin price and why we might be down currently. As you can see here, we're just going to start off at the CoinGlass.com website, which gives us some data analysis about the current market. Bitcoin over the past 24 hours is down 8.64% to approximately 57,820 at the time of this recording. Ethereum is down to 2,888. Down 8%, followed by BNB also being down 8%. Solana is down 10%, XRP 3%, Doge 11%, Ton 10%. But just in general, overall, we are seeing that there is a sell-off currently happening in the markets overall. The 24-hour liquidations for the long traders and short has been 455 million, up 237% from yesterday, which means that there is a lot of volatility currently in the markets, or due to the volatility that's in the markets. We have total options open interest has gone up, and we are now at 24.76 billion, which could also indicate a huge volatility event the closer that we get to these things expiring. The Bitcoin futures on the CME is down 18%. Now, we noticed that one major thing that I think is a pretty significant deal here is that the crypto fear and greed index is now back to a more neutral-ish level at 54. As we are, the longer we stay at maybe these levels and there's concern and we're not seeing like a huge significant bounce, we might see the crypto fear and greed index also sliding further down, but there's no guarantee of that. We are seeing that there has been a lot of volume in the space. Mostly, specifically, BNB is one of the top traded tokens, well, in terms of volume percentage, but not in terms of actual dollar value. But there's some good news that came out of the BNB community. CZ Binance, instead of actually getting sentenced to, I think the DOJ was seeking 3 years, will actually be serving 4 months, and hopefully he will actually be getting out sooner than that, depending on how that goes. But as of now, it is at 4 months, and that was the sentencing. Now going on here, I want to go jump into the Bitcoin price chart. As you can see circled here, currently Bitcoin's price is not doing too well. We have broke below the stop loss that you would have exited a trade if you were going to trade this ascending or this bullish triangle here. But looks like we went below it. We tried to come back up and try to break up to the upside, but we were smacked down. And we also did one final test, and now we are going to the downside right now. Now, how far can we go? I do see on the chart here some level of support. I do have lined up here is about 51,500, or just in this region in general. So we could see continued selling off of the Bitcoin price, and we could see another about 10% move to the downside here in the following days or week, but that is not guaranteed. But so far, as you can see, over the past 2 days, we have come down about 11%. Now, we can also see down here that the RSI is currently looking to push towards the oversold region on the daily. So I think once we definitely see something like that, we usually have a recovery to the upside. So we may see something like that similar, and before we have like a real recovery in the price and more further upside. Seems like now there are more macro factors that may be affecting the price globally and nationally in the markets. So that's all I have for that. Let's move on to the next portion. Now, I don't recommend that you guys do trade any of this, but we are just speculating on where the price may go. So if you do have a little bit of extra cash sitting on the sidelines that you have not deployed into the market, and maybe you do come into some cash in the next few days and you want to deploy it into the markets, then I believe you will be getting a great opportunity to do so. Now, even at these prices, I think you're getting a bargain discount from where we will be 12 months from now. But some people like to try and, catch a falling knife, as they say. But it is also very dangerous, and catching a falling knife will lead to usually some bandages needing to be wrapped around your fingers when you're trying to do stuff like that. So the best thing you can do is just continue to DCA in, just buy spot. Do not do any of this margin or leverage trading or options because it is very risky and it requires a very high level of expertise, in my opinion, that someone who doesn't have a lot of time to do will not perform well. So just throwing that out there. But let's move on to a article. Jumping into this article that was published on the 30th or earlier today, my time. Bitcoin tumbles below 60K, risking deeper pullback as crypto markets endure worst month since FTX crash. Recent U.S. economic data could prompt more hawkish forward guidance from the Federal Reserve. And they're showing here the current price change in the past 29 days is down 15.5%. And here are just some bullet points. Bitcoin has lost over 16% in April, on track for its worst month since November 2022. Bitcoin could drop to the mid to low 50,000 region, LEDN CIO said. The Hong Kong spot crypto ETF debut wasn't as poor it was made out to be, a Bloomberg Intelligence ETF analyst noted. And now entering into the article here. It might be time to call the cryptocurrency correction a bear market as Bitcoin tumbled below 60,000 with what appeared to be a poor debut of spot ETFs in Hong Kong and interest rate fears giving traders plenty of reason to sell on Tuesday. Bitcoin hit a 59,100 low in the afternoon hours, its weakest price since late February, and down over 5% over the past 24 hours. The broad market CoinGlass 20 index declined even more during the same period, falling 6% as Ether, Solana nursed 7 to 8% losses. Bitcoin now lower by roughly 20% from its all-time high above 73,000 hit in mid-March. Traditional markets struggled as well after a spate of U.S. economic reports Tuesday morning had a stagflationary feel, showing slowing growth and speedier price pressures. The Nasdaq shed 2% for the day, while the S&P 500 fell 1.6%. Recent reports showing stronger U.S. economic data and hotter inflation significantly tapered U.S. Federal Reserve interest rate cut expectations, and that's weighing on the digital asset market. Joel Kruger, market strategist at LMAX Group, pointed out in a Tuesday report. We continue to see evidence of the Fed needing to be leaning back to a higher for longer policy outlook. Despite investor calls for more accommodation, Kruger said, with the U.S. dollar coming back into favor across the board, we are seeing this filter over into crypto assets as well. Now, this portion says the worst month since FTX. With Tuesday's decline, Bitcoin and the broader market are on track to snap their 7-month winning streak with their worst monthly decline since November 22, when crypto exchange FTX imploded. With a few hours left from the last day of the month, Bitcoin is down over 16% through April, and Ether is lower by 18%. Smaller cryptocurrencies suffered an even deeper correction, with altcoin darlings SOL, Dogecoin, Avalanche lower by 35 to 40% this month. Overall, the total crypto market capitalization shed nearly 18% of its value, recording its biggest decline since 2022 of June, TradingView data shows. Bitcoin's decline might not be over. I'm expecting a sell-off to the mid to low 50,000 region, which should prove to be a buying opportunity, said John Glover, Chief Investment Officer of crypto lending firm LEDN. Seasonal effects with lower interest during the summer months also point towards lower prices, K33 research noted. A trader opting for a strategy of buying BTC on the May open and closing the trade on the September close would have seen a cumulative return of minus 29% in the past 5 years, K33 analyst Vet Lund said. Whereas a trader buying the October open and selling during the April close would have experienced a massive 1,449% return. Now, the not-so-tepid Hong Kong ETF debut. The first day of Hong Kong listed spot Bitcoin and Ether ETFs failed to wow market participants focusing on the product's tepid just over 10 million trading volume. The debut, however, was more successful than at first impression, considering that the Hong Kong ETF market is only a fraction of the U.S. market size. Bloomberg Intelligence senior ETF Eric Balchunas analyst pointed out. If you localize numbers, this was big, Balchunas said. China AMC's Bitcoin product alone gathered over 123 million of assets in its first trading session, making it the sixth best ETF launch over the past 3 years and is already among the top 20% largest ETFs, he cited Bloomberg data. Balchunas also added that the Hong Kong listed ETFs arrived at a good time and could help offset the outflows from U.S. products that have slowed down recently. Now that sums up that article, and I just kind of want to talk about the current corrections and further expand into that. It sounds like expecting sell to the mid to low 50,000 region, which should prove to be a buying opportunity. That, funnily, is kind of where I see the price going, but I am just speculating, and I am not a professional, but just for some sake of trying to predict these things and using some technical analysis, I guess that would put us down from our all-time high if we were to go there of approximately 30%, and doing a whoops, wrong. I believe this is this one. Just to show you, I have no idea. Okay. But if we were to, I believe, go to the bottom of this, if we were to go all the way from here, that 51.5 would actually, interesting. So the 51.5 would line up exactly with the 0.618 for the Fibonacci retracement tool, which generally is a significant area of support in a bull trend. So I think that seems to be a valid area where we could see either consolidation or consolidation, which means basically come down here and you kind of just wave out here or something, or you could see something where we just come down and bounce or immediately, or we could just go right through it, but nobody knows. But generally speaking, the 618 is a region where we can expect that the price will see a slowing of the selling pressure, I guess, for lack of better terminology. Also, if we go back in the past of Bitcoin's price history, 30% corrections are actually very normal. So you can see here, let's see, here we did some here. Yeah, this one we corrected as hard as 36%. This was in the 2015 bull market, but we see that there were multiple times where we had major corrections on the way from 200 all the way to 20,000. So this is 33%. Another 33%. So this is a weekly price chart, just in case you guys are not aware. Even this 1 week, and this happened very short period of time. We saw about 30% over the course of 3 weeks. And then of course you had the 2017 top, but that usually marked the end of the cycle. But just going to the 2016-2017 cycle, you can see here we have 1, 2, 3, 4, 5, 6, 7, 30% or more corrections on the way from 200 all the way to 20,000. So this isn't something to really like panic and freak out about. If you are worried, just continue holding. Don't panic sell and kick yourself out of the market, out of your position, because I think this is only going to be temporary, and we're not going to be going to zero as some people might try and tell you, or going to $10,000. But anything is possible. But I just find it very hard to believe that we're going to continue going that deep. But let's go here and jump into a more, a better chart here that shows also the past cycles and kind of. So this is going back to 2012. We've seen here we have this is minus 50%. Now we got to zoom in here. This is April 2013, 80%. Wow. And we had some 45% move here. And let's go here. About 25%. But obviously these were a lot different conditions. The participants that are in the market were different players, as you could say. So I believe the reason why we haven't seen as much volatility now is because we have more accredited investors and institutional traders now in the space who have a more set it and forget it type of deal, whereas in the earlier days you had more people who were wanting to trade short term because there wasn't really regulations and tax laws for that. So you could make 100x and potentially not have to pay much, if any, tax at all, and it wouldn't be an issue because there was no regulations or guidance on the market early on in the days. But now with more participants in the market, especially institutions, we're starting to see kind of the volatility dampen down, but maybe they want to bring the volatility back and they believe it's good for the market. So who knows what can happen moving forward. But also, looking here, we can see that even on the weekly RSI, we are seeing like what I think would be more of a healthy reset, because we've came up so hard and very fast. We've done almost 300%, 350% in a very short amount of time. Now, if you are like in the stock market, getting 350% return in a year is just absolutely unreal, and you'd be like a god investor. That's better than Warren Buffett. Warren Buffett gets like 30% a year, but he averaged, I think it was like 30% a year, but he averaged that for like 20 years or 30 years or something crazy, mind blowing like that. But to get 350% in a year in something is quite incredible. So it makes sense why we are seeing or needing to see, I guess, a sort of washout or rinse out. Now that wraps up everything that I have for you guys here today. I hope that you guys find some of this information useful and it is helpful for you on your crypto journey. Please remember to like, subscribe, and leave a comment below. And as always, remember to keep calm and crypto. I don't wanna let go.